Off we go officially. Good afternoon. Happy Friday. Welcome out, everyone, to the Options Income Launchpad weekly market wrap. We're looking for you to be here live. Those of you who listen to the recording, I want you to do what you can to join us for the conversation rather than only listening to the recording. I know for some of you that is not feasible, but it is definitely preferable if you can. My name is Scott. I'll be your host. Those of you who are here, you get to dictate. If you have questions, we'll answer your questions. If you have trades you want to look at, we'll look at those directly. When it's a light number, those who show up get to control the session. So make sure you take advantage. We'll go through our normal routine. First and foremost, got to remind you about some housekeeping matters, that what we're doing is education, illustrative purposes only. Nothing we do or say should be intended or construed as a recommendation to buy or sell any security or financial product. Nothing we give should be considered advice. Any trades or decisions made should be done at your own risk. We're not brokers. We're not advisors. Blah, 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 yada, yada. What are we going to do today? Let's talk about today's market. It was weird. David was right. The assessment for today's market is it was weird. A weird day, kind of a weird week, kind of a weird time. You know, we've got the Fed, who's shown a switch to an accommodative stance, more dovish, despite the fact that we just saw a better than expected GDP. So it seems as if we have a few things happening. We have a growing economy while also a shrinking labor market. We have what appears to be inflationary time frame. So it's like we have inflation up, the economy up, employment down. Not quite sure who wants what from the Fed, but everybody wants something. It's a strange time right now. Overall, we try to maintain a what do you see, right? And this is where it comes from. This is something I remind people about a lot when I would coach, and that is we need to learn to recognize the difference between what we think, what we feel, and what we see. And then throw out what you think and feel. What do you see? That's important to us. Now, in times like this, there's a weird randomness almost to the individuality of how companies are being impacted by geopolitical news, right? We see Tesla today, where there was a surge of people trying to buy before the credit leaves with the new bill. And so there's a huge amount of concern that lost tax incentives are going to have an enormous impact on their business model. As we watch certain companies responding to tariffs, to AI developments, to the news, targeted political news, it's crazy. It's interesting. It's a funny thing. I can remember way back, early 2000, late 99, early 2000, when I first joined the trading desk, right? This was still the tail end of the bull market, the .com. What a funny thing, right? When you think about, like, that was not that long ago when we had the whole, like, is the internet really a thing? Is there going to be a .com economy? And now it's moving into like the next generation of the AI model and very similar corollaries, I think, between the two. But I remember getting on the trading desk, right? There's guys who had been there 10, 15 years. And they're like, oh, man, this market's showing me some things I've never seen. And I laugh now because I'm like, I said that during 2008. I said that during Brexit in 2011, during election 2015, it's just like, the market always finds a way to experience something new while also recycling the old, right? And so we kind of have a little bit of both going on. My strategy right now is to maintain what I know works. I'm going to cut losses short. I'm going to let my winners run when I can. My posture has warranted giving trades a little bit more room. Now, in doing so, that certainly has helped a couple of times and hurt a couple of times. So, one thing we don't really have a lot of is consistency. And the market loves things to be consistent. That's a great question, David. You're asking the right question. You go from a good assessment to a good question. How's the VIX? We'll definitely dive into that early on. So let's talk about the market. We'll talk about the posture. We'll talk about trades that we're going to carry, what we'll look for next week. Did anybody see when they're pushing the jobs report to? I didn't see how long of a delay is it? That I did not see. So if anyone did, let me know. Okay. Let's keep going. Ooh, we'll get rid of that. Bezos says the AI bubble is real, but so is the technology. I don't know what that means. Clearly, the technology is real. There's just so many different companies that are developing ways to integrate and use that data set, that ability to process data. So until after reopening. Okay. So no jobs report leaves the Fed flying blind. They're not quite sure what to think, but I'll tell you what, when we'll go look at it, the expectations still look good. Interesting day. The Russell finished up 0.73, the Dow 0.7, the S&P only 0.16. It dipped into negative for a minute, and the NASDAQ is finishing in negative territory as of right now, unless it can recover. Certainly a little bit of a tech crunch. We have Netflix heading for a 5% drop as Musk urges users to boycott. I just don't understand. Like I would, if I were him, I would just focus only on my company. Like, don't worry about Netflix and their $30, $20 a month subscription. Worry about your huge inventory of cars that people will buy less if there's no incentives in place because of the administration that you significantly helped to put into place. I don't know. Maybe there's something to the madness. He is the richest man in the world, so hard to second guess, I suppose. Dow leads stocks towards more records. What else do we have? The Magnificent Seven are roaring again. Can they keep climbing? It's a funny thing when they talk about the Magnificent Seven and they're like, oh, that's all there is. You're like, what do you mean that's all there is? Those 7 companies make up like 25% of the market by cap. We can't really expect 7 random mid-cap stocks to be like, these are the ones that are going to lead the market. You're like, what are you talking about? How? No one's... Right? The Magnificent Seven can lead the market because if money's flowing there, then there's likely to flow other areas. I've never understood people who are like, oh, you're putting too much into it. How? They're enormous. They're a huge, huge part of what we see. What else? Soybean farmers deserted by China, scramble for other buyers. Yeah, not going well in farmland. Interestingly, my understanding is that last administration, 80 to 90% of the money we collected in tariffs last time went to go to a farmer bailout, a farmer subsidy, because of the impact that the tariffs had on the farming industry. And so I'm wondering if we're headed towards the same thing, as China is buying South American soybeans now and leaving our farmers in a pretty bad situation, from what I understand. So trucking industry facing horrible rates, tariffs, Werner CEO says. Rare earth stocks soar on speculation of more White House deals to come. USAR. All right, let's go look at a few things. Let's go take a look. I just want to see this rare earth stock. I don't watch a lot of those personally. But this is a big one. You can see, I mean, it was really kind of just lackluster until the last 2 days, and then it became news driven. So it's very difficult to capitalize on the news like that, because what drives the news up can definitely drive the news right back down. So, yeah. Okay. Okay, what else? Let's look at the S&P and the VIX real quickly. As David said, a good idea. Good to see those of you who have joined us. We're a little light today. We'd love to have some participation and feedback. Yeah, what do we see here? Well, we seem to be topping out. Stochastics is topping and pinching. We've hit the same resistance 3 days in a row. We're dojied here at the top. Does it look bearish? No. Does it look like a pullback maybe in the cards? I would say yes. So what does that mean by way of what does that mean by way of trading? Well, if you have some gains, you might take them. If you took the Coinbase trade, I hope you did, because that one has worked out very well. Our target was actually reached today. We were looking for 380. Got to 383 today. Can I carry this through the weekend to still get some time decay? Time is on my side now. It's made over 80%. I would actually say, you should book some. Book half. Keep some if you want to push and try to and gain a little bit more. But very strong move. Got a good piece. You definitely don't want to give it back now at this point based on what we see here. I'm a little surprised with the Dow moving well that we're not getting a little bit of we had some bullishness here. This one is just sort of stalled. I'm going to give it another day. It is a spread. My risk is contained, so I'm going to see what happens and give it to next week to see what we have. Let's go take a look at the VIX. Did anybody day trade today? Let's actually pop in. There was a little bit of a morning move, right? You got a little bullish pop here, maybe one here as it moved out of the opening range, and then it fell back down, and now we're just sort of grinding to a halt right in the middle. Volume is definitely light. Definitely light. So let's take a look. Nope. Let's go back to 6 months. Let's even go 3 months, actually. Now, again, one of the things we have to continue to orient ourselves around. If I brought this 3-month chart up and I said, take a look at this chart. Tell me what you see. Are you bullish, bearish, or neutral? Just based on the underline here, what would we say? And I think we'd all have to agree it's a very bullish looking 3-month chart. It's making higher highs and higher lows, pretty steady. Like David said, the volume has dropped. It looks like we'll be below average, which is fine. I mean, we just had a little bit of a bullish bounce into a new high. But overall, I'm certainly not reversing my perspective based on what I'm seeing here. Let's take a look at this week, what we have. Let's look at the VIX, and then we'll actually come back. Let's look at the VIX first, and then we'll come back in and just kind of step through each of our market posture components. So we have the market at basically the same. I mean, it's really the same, right? It's actually technically down. Now the candle itself right now, and what I said was I might have to reevaluate this. If it were to make a bust move up here, then I'd be like, whoa, maybe this is actually a higher low reversal. But I don't see that yet still. I don't have confirmation of that yet still. This candle here that we last, let's actually draw this across. This red one that we're like, that's a big drop in the fear levels. It's down. What does that mean to us? Well, you can see that since then we're kind of stuck inside of that range. And even today, it's actually a little bit lower than the previous day. And so I don't really see a lot. If this were to, stabilize and then turn down early next week and give us a red candle here, I would be like, oh, okay, that looks pretty bullish, actually. Yeah, that's a great way to put it, David. They're not freaking out. We don't see the market panicking with whatever is developing. And when we say it, we especially mean institutions. We're not seeing I will tell you, the institutions most definitely have just as much of a tendency to overreact as anybody else. But they're not right now. We're not seeing that overreaction. So, yeah. Okay. We've got that going for us. I think the VIX it's a bit hard to read still. If you remember, the last thing I drew was this. Certainly that was enough for us last week to say, hey, we liked the way that turned over and that improved our score a little bit. Is our score going to change with this? No, we're kind of in this, like, if it breaks this way early next week. In fact, it's interesting. Yesterday evening, I almost forgot about this. Yesterday evening when I was presenting on our Foundations Q&A, I drew 3 possibilities. I had this same thing drawn and I said, here is A, and I said, here is B, and then I said, here is C, and what did we get? We got C, right? We said, if we get bad news, and I didn't realize, they didn't say it last night, right? The news that they didn't have the jobs report ready came out this morning, or did I miss that yesterday? I don't think I missed it yesterday. Otherwise, we would have talked about it. It feels like that came out this morning, where we said, hey, what do we think is going to happen? If we got a good jobs report, and like good but not too good, I think we would have seen it turn down and been a B, but where did we end up? We said this means we're doing what? Kicking the can to next week. Kicking the can down the road. We're not sure yet. We didn't get what we needed yet. So what do we need? We need more information. But I will say that if it kicks out this way, that's going to make me think of this as a higher low, and it's now escalating. But if it gives me a break to the downside of this little consolidation, I'm going to think of this as another lower high, right? From one to the next. It's not a huge difference, and I have to go from shadow to body to make that work. But I tell people I have a bit of fluidity when it comes to people say, do you use the body or the shadows? And I say, yes, which I get is not the answer they're looking for, but it is the answer that is accurate. I will use both interchangeably depending on what I see. I don't want to be rigid with that. But at the end of the day, I agree with David. Traders are not freaking out. Institutions are not freaking out. We're still finding ourselves in a bit of this consolidation, which means we need more information. Okay. Let's go see what else is going on. So we did not get our jobs numbers. We were expecting this and this, but we did not get it. We're waiting to see what we get when it comes. I believe next week we start with some more inflation. Don't we get CPI, or is that the week after? Maybe it's the week after. Next week we have Kansas City Fed Jeff Schmid. Is he new? Schmid. Do you think they call him Schmitty? If they don't, they should. Okay. Kansas City Fed Jeff Schmitty is speaking on Monday. Bostic, Bowman, Miran, Kashkari all speak on. A lot of Fed speak next week on Tuesday. Wednesday, Alberto Musalem. That's a good name. Alberto, Michelle Barr, Kashkari. Actually, it's funny because as I see all these Fed speaking, the one thing that I actually think is going to matter the most is here. Minutes of the Fed meeting. So the September meeting where they're like, hey, who was in agreement and who was in dissent, and how has that shifted to help reiterate what we think we're going to get from the Fed going towards the end of this month. Yes, David, the consensus is still 2 cuts. And in fact, I read something that said the shutdown is more likely to keep it, but I didn't read the attribution as to why. We'll go here in just a second and look and see, now that we're in day 2 of the shutdown, do we see any changes in the way the market is pricing it in? But as of right now, nothing that I have seen indicate that. And there you go. That's a very good, like we said, don't fight the Fed. That's a very good reason why bullishness continues, is as long as the market believes the Fed is in an accommodating situation, there's a good amount of ability to sustain current momentum. Thursday, jobless claims. More Fed, a lot of Fed speak. Not a lot of data. And then Friday, we have our man Goolsby. Sentiment, monthly budget. Yeah, there's really nothing data-wise. Nothing really coming out data-wise that the market is looking for. which makes me think it's the next week. The next week is when we'll have CPI and PPI released for September numbers. I don't even know if those are going to have much impact. If they were to spike, do we think that the Fed would dial back expectations for 2 cuts and move it back to only 1 cut? I mean, I would have to think so, but I got to say, right now the market is so gung-ho. So let's go look at, I guess we've pared back. I think it was at 98. Now it's at 96.7% of people think or have priced in the way that they're trading, interest rate futures, which is what this comes from. Never noticed that they put the dot plot. Oh, I guess I can't open it in a new page. The dot plot. That's a great question, David. If the government shutdown continues, especially if it continues and the administration starts to implement layoffs as part of this, it could very much disrupt expectations for data. Although I don't know. That is a good question. Let me first of all get this. Let me see. Okay. Good question. A government shutdown can delay CPI, PPI, and PCE because they are coming from the BLS, the Bureau of Economic Analysis, that may suspend non-essential operations during a funding lapse. Yeah. There's already a projection that key data could be delayed 5 to 10 business days even if the shutdown is limited. If it drags on, delays could be even longer, or they could even skip certain months. So yeah, that does, put the Fed into a bind where they're kind of like, we're just not going to release data. That's a scary situation, isn't it? Like, I feel like right now we're at a time when the jobs data and the inflation data is absolutely critical. And they're like, well, we're not going to have it. It could be a little while. Like, what? Let me go back in and let's just see. 85% priced in for a second cut in December. 15% of the market thinks no. There's just this, little outlier fraction of people who think no cuts at all. I gotta say, I have to think that the Fed would be less likely to act without the data. So I would lean more towards this one cut, and then if they don't have the data they need, they're going to wait until they get it. But I guess we're in strange and uncertain times. Weigh in. What do you guys think? Does the Fed continue to act dovish even if new data is not coming out? That's a tough one. The fact that the administration put at least one more of their loyalists into play certainly makes me feel like it's more likely to in that regard. But overall, I guess we'll see. All right, let's get to the watch list. Strange times indeed. Apple is honestly, if it weren't for the fact that it was a Friday and we are in strange times, I would look at this right here as saying, hey, this feels like it was a consolidation. The sellers had a week and change. And what did they do? Nothing. And then all of a sudden the buyers came in. The buyers didn't have a lot of volume, but we don't really need that volume. Volume tends to pick up after we get started. So yeah. Yeah, we can wait. I don't think we'll have the Heiken Ashi yet. I think we'd still have one more to wait for. We could wait and see if it turns into a new Heiken Ashi momentum period, and then say, hey, maybe we look at it as a continuation trade. But I'm definitely looking at this. Apple's a very strong piece of both the NASDAQ and the S&P. And as of right now is showing strength. Strength followed by a lack of weakness, and now looking to see if it can pick back up. I think that's strong. Archer Daniels, a little bit of a bullish / defensive move for me, though. The problem is it actually hasn't broken this yet. Doesn't really have a big surge in volume. I need it to get through. Then on the pullback, then I would say, all right, that's tradable. Otherwise, I'm in a watch, wait, and see type of a mode here. Amazon, same kind of a thing, right? As I said, I'm not trying to call bottoms once we have these big sell-off moves. I needed to do something, come back, give me a higher low, let me know that the sellers have the sellers are spent. ANET, this one, it looked like it was going to get started, and then yesterday it pulled back, and then today it's holding. That's a tough one right there. If you still have a piece of this, you might think, I'm going to give it Monday to see if it can go. It has not shown selling pressure. The buyers haven't done anything. They failed to materialize here. They seem to have failed to materialize here, but at the same time, the sellers haven't either. And so you have this extended sideways consolidation. Certainly easy to run out of time. APH, well, that might have sucked somebody. I mean, if someone said they traded this here, I'd be like, yeah, okay, I can see why. Now it's on a hiccup. That's support. If it pulls back and then turns out of the hiccup, I'm willing to consider a post-hiccup trade. I still think it's a very bullish stock and worth considering. AVGO, as I said, it really just didn't feel like it. I was watching that one very closely thinking, hey, right through here, if it turns, it could maybe push the momentum. But the longer it sat in this, the more I'm like, I still don't feel like it's broken out. I feel like it's riding along from the upside, the same line down. Right? If I take this to a line chart, you're going to see it's going to have a very different perspective. Just sitting right at that same level, right? Yeah, I'm actually less inclined towards that one. AXP, a possible setup developing here for early next week. BAC, same thing. Citigroup, same thing. So the financials, I would say, moved more into position today. I'm glad they didn't give a signal that I'd have to consider, because I can say, hey, you know what? Let's wait and see what Monday brings. If we get something out of that sector on Monday, then I think we have an opportunity to put a trade on in there. There's some bullishness. It's pulled back, not a ton of sell-off volume. I think it looks reasonable, and we have time before earnings. And to flag earnings, remember that earnings season basically starts on financials. I don't know when financials kicked into that spot. It didn't used to be that way. I used to always go to AA, Alcoa, Dow Component. You can see that one is 1022. That's the big date. 1022 signals the big date, but you can see that the week before, we're starting to get financials. 1015, 10:6, 10:14, 10:17. Goldman is 10:14. Morgan Stanley is 10:15. 10:15. So there's a range of them that are going to be coming out at that time. We have to be aware of that. But I believe we have time for one more trade window before that. Yeah. Caterpillar. Oh, Caterpillar. We talked about two from industrials. I put one on as an alert and took the other one. I hope other people took both. I only put one alert out. I put it on GE. Of course, I now look back and wished I would have done this one. I took them both. I hope you saw this one. It's looking strong, whereas GE is just sort of floundering a little bit. Like I said, still okay, but it didn't make that move for the sector. But that looks strong. I would definitely, if you have a piece of this, carry it through the weekend. CCJ setting up. I think this is a setup going into next week. We got to a new high. It's pulled back. Looks like it's trying to start. If it can kick out of this with some volume, then I think there we go. Now we have another one of these, possibly moving forward. What I don't see is defensiveness. What I don't see is sellers, right? Okay, let's see. CLS. Yeah, kind of flat, kind of sideways at this point. I'm less inclined here. Let's see. Sorry, my mouse. Yeah, I would say patience. Nothing there for us. Capital One. Looks like it's trying. Coinbase, strong. Cisco. So Cisco made another attempt up, kind of rolling over. At this point, it's just run out of time. Loss was never very much. It just was mostly more of a time bleed, and the buyers just never came in as expected. That just sometimes happens. There's not much we could do with that. So I would imagine most people have shut out of that now, but were able to do so with a pretty minimal loss. Would be my expectation if you took that trade back when the alert came out. Delta in consolidation, nothing there. DoorDash, it's kind of pushing around its old resistance. Diamonds, a little bit of defensiveness here. I'm like, there's no defensiveness. There's a little bit here. But it's interesting how it's coupled with still a push in small caps. You can't really have both large caps and small caps competing to be leaders at the same time. If it's small caps, we tend to interpret that more bullishly. If it's large caps, then we think there's a chance money starts coming out of small caps and technology and moving into large caps, and that would be interpreted more defensively. I don't think we've seen that yet. This is, we'll take a look on Sunday to see how our posture may shift. But overall, from a price and a volume standpoint and a VIX standpoint, I would say it's going to stay the same. So we're probably going to still end up in a 5.5 scored market. DocuSign. Bad place. Don't want to trade this. I do want to watch just because I'm curious what happens as some AI stocks or some stocks start getting pushed by expanding AI capabilities. And apparently that's what we have going on here. Electronic Arts, expect this to move like this until either new news comes out, which would mean like, oh, the deal fell apart and it drops back down. But there's most likely a tender offer here around $200 a share that people are now just going to wait until they get bought out. Expedia. I feel like Expedia is still kind of a maybe as well. It had this pullback, never broke support, trying to bounce out of it. If it weren't for a Friday, I'd think about it. But on Monday, if we see something like this and it kicks into gear, I think, yeah, maybe we have something. Ford, kind of flat. Not Ford, flat. Ford, up 3% today, actually. I think Ford's benefiting from Tesla bad news. This was a breakout, and I said, okay, now what? Well, when this is done, the next trade is the one that I think is the right one. If you're a breakout trader, you might have taken this, and you would have had a little bit of a benefit. So yeah, a couple of things that are interesting there. Futu, again, I would imagine you probably ended up closing this thing. It tried to go, it stalled. And then we had an engulfing, and now it's just kind of still holding support. It's still holding support. The question is there enough there that you would want to carry through the weekend? I would expect most people have shut it down. Certainly flag me if you have a different perspective or if you're still holding any of these. Fiber, I don't know what happened there. And gapped up, sold off, and now it's just sort of back where it was prior. Remember, this one doesn't really have options, so we didn't look at it too much. GE, we got the turn. I want you to pay attention to the last time we got this. It turned, and then it had a red candle, and then a doji candle. We have a red candle, and then a doji candle as it started, and then it moved. So am I going to give it Monday to see if it can't replicate that? I am. Absolutely. Gold, still pushing highs. Google, still pushing an entry. If you were thinking, and for me, I'm going to start to think, you know what? I'm going to move this now. I'm going to move this to, it went to a hiccup. So I'm going to actually kind of say to myself, well, what if I don't get this until Monday? What will that look like? Where will that put me? Certainly the sellers have had a chance. They've done nothing. The buyers are knocking. It's there. The trend is still holding up. I still like the way that Google looks as a communication services leader. Goldman, again, I think if it weren't for Friday, that would be worth a consideration. I'd like to get through the weekend and see what Monday brings us. Hood is overextended. Howmet. Howmet could be setting up. IBM overextended. Intel overextended. IWM pushed, not really holding on, but still up 0.75%. Levi's overextended. You've got earnings coming up here. Not much we can do with that, but wait. Lumentum. That was a tough one. I never felt like this was a good entry. And then it just got one good day, and now it's rolling back over. It did technically make a new high. My thought process is if this can come back and stabilize at a position where we get a more concrete, more stable, higher low, I'd be interested. Las Vegas Sands. Ooh, you can kind of see that same thing. It tried. Most people, I think, bailed. Either bailed back here, bailed when this one fell apart. I don't think anyone kept holding. This one I bailed back here when it broke support, but it can try to trick you back in. And this is why you can see it just never really gave enough. That one's outs. Nothing for us here. You can see this is now in consolidation. There's nothing we can do with that. Meta not looking good. Again, I told you I don't like Meta trying to catch a bounce way down underneath the 50. We took out this low. We took out this low. We got all the way down here. And you can see it seems to be a little bit stuck in that range. Morgan Stanley, possibly setting up and with time for a trade if we can get it Monday or Tuesday of next week. So right now for me, I would say financials is the core area that I'm looking for any new trade, as well as possibly communication services with Google. Let's see, Microsoft. Kind of flat, kind of hitting resistance. Micron kept going. If you had a piece of this, I would maybe take some, keep some. There seems like there could still be some momentum there. Netflix is obviously in a bad place as there's a Musk-driven boycott of Netflix. I'm not quite sure why there. Northrop Grumman still holding up. NVIDIA. If you caught a piece, you're probably thinking about taking it and then seeing if it's going to give us another opportunity. So I would say chips for trades next week are setting up. Pagaya, nothing there for me. It's too much of a sell-off. I need the full Monty of a reversal before I would be interested in going forward there. Palantir got beat up pretty hard today. I would say I'm leaning more towards NVIDIA and TSM from chips at this point. QQQ, a bit overextended. Roblox got that same kind of a smash that Reddit got. Reddit, you can see, is trying to stabilize, but it's now underwater. Needs to do one of these before anything else can be considered. Rocket Lab, okay. I know a few people like this one, and it made this turn. It's moving. I would definitely be holding that through the weekend. Showing more momentum than most. Silver overextended. SoFi is definitely one that I'm looking for still, although at this point it's getting close. It's got to hold and turn for me. If it can hold and turn, yes. Otherwise, I still have Morgan, Goldman, BAC, Citigroup. You can see that this one also has accelerated a little bit these last 4 days. So I'm a little bit more iffy now as I see that volume profile start to increase in magnitude. There's the SPY overextended. There's Tesla, second day of pullback. Taiwan Semiconductor, I need a pullback. If I was in it, I'd be taking some and maybe keeping a little to see if there's anything left, but it feels like it might not. We don't have a lot of time before this has earnings. So depending on how it moves is how likely we would end up with the ability to get another trade in there. Uber is holding up. You can see that it popped up. It's still getting higher lows. It still looks reasonable. Upwork looked like it was going to stabilize. We don't have a lot of volume on this. So if it can kind of come back in and give me something like this and then turn, I would still say this is a valid and viable perspective for an entry. I hope you notice though, right? Like our propensity to look for new trades right now is significantly down. We want to see data come. We want to see the market interpret the data. We want to see, what does this look like? We're in a bit of an interesting position right now from that perspective. Visa all of a sudden has broken this consolidation, took out this. So, for me, Visa pulling back to a higher low would put it back into something I would be like, maybe we could consider that this is now trying to move into some kind of a trend again. We'll see. Walmart, stable. I'd say Walmart for a trade early next week is on the table. And that is our watch list. Now, what does that leave us with? Well, if we're trading less, we have more time to put in to our trading plans. We're working on routines. Take advantage of the opportunity to get your routines feeling strong. Next week, we're going to shift gears and talk about record keeping and analytics for the next couple of weeks. That's obviously a big piece of what we're going to do, but we want to make sure that this is done. What do you do before the market opens? What do you do during market hours? What do you do in the afternoon? This is the sample. Yes. This is the sample. So if you want to see like, hey, what does this look like with information in it? I don't think I have the other one open. Let me see if I do. I don't have just the outline. This is the sample. So if you go in, you can download this outline with nothing in it, and then just get started, or you can download it with nothing in it, then download this to kind of be like, hey, what is this supposed to look like when I start developing this as a plan? What kinds of, is it bullets? Is it paragraphs? Is it right? So just kind of giving you a little bit of a head start if possible. Well, you guys were quiet. I understand why. It's been a funky week. Kind of an interesting thing to not have a jobs report from this week and to see how the market is responding. Overall, my expectation is that that as of now the market posture is going to hold up, but there's some concerns. There's concerns that definitely has me thinking I'm going to be a little bit more discriminate in how I trade. And I agree with you 100%, David Wilson. Next week should be very interesting indeed. I hope you guys have an amazing weekend. I will see you Sunday morning at 11 a.m. Eastern for us to really dive in and see what we think is going on, how we want to trade it, how we want to account for it, where we're willing to take risk, how much, etc., etc. Appreciate you coming out and hanging out. It was a light group, but a strong group, and I love seeing you. Have a great weekend. See you Sunday, as always. Happy trading.